right, legends, let's analyze the price of Bitcoin. Hope you have your coffee ready. I've got some coffee here from Mug and Bean. I'm not sure if you have it available in your country. I really like their coffee. Get one every morning when I drop my child at school. And so get your coffee ready. Let's do a little bit of technical analysis here on the price of Bitcoin. Welcome to the live stream. Remember to smash up that like button if you do enjoy the content. And I did tell everyone that I'll be going live during this time, more or less during this time, every day. Okay, and if it's not me going live, it will be a update like I did yesterday. Okay, so get your coffee ready. Let's do a little bit of technical analysis. And now with this little drop that we see here to the downside, okay, I mean on the higher time frame it looks like nothing. Okay, but now with this little drop here to the downside, the biggest question, are we going to make a higher low and continue? Or are we going to fall down? Okay, and these are some of the scenarios. So we can look at this structure and just quickly discuss, well, what can happen in this structure here today or tomorrow for the rest of the week. Okay, I do expect some volatility today. Thursdays are usually my best trading days for some reason. According to my stats, my data, my trading journal, Thursdays for some reason are my most profitable days. That's where I just literally nail the entries and make the most profits. So maybe I shouldn't trade today, but I mean, if the opportunity presents itself, why not? Why not? I did attempt a long this morning, and it's still getting a bounce at the exact same level that I wanted to attempt the long. Got stopped out. I don't mind being stopped out. It was such a tiny stop loss, such great risk management. But there's a specific scenario. Okay, that I'm keeping an eye on. Right, without further ado, let's get the party off the road. Guys, so let's first focus here on the 4-hour time frame. Let's just look at the structure that is formed here to the downside. Okay, as per the update yesterday, there was one scenario. After I watched my update yesterday, because that's what I do, guys. I watch my own live streams. I watch my own videos. Obviously, I edit them as well, some of them. And there was one scenario that I forgot to mention, but at least Andy spoke about that scenario. In all of the summaries yesterday, there was one scenario that I forgot to mention, and that is basically you have an A or a W, okay, you have a W, okay, you have an X, and you form a Y to the downside. That was the one scenario that I forgot to include in the summary on Sunday, okay, when I recorded the live stream. This can be your A, you form a B, and you can go down in a C. So this can still extend to the downside in a WXY, which is a three-wave structure. You at least expect a bounce back to the upside to come and eat up, I would say, at least this high here at $96,000, $98,000. So I just quickly wanted to highlight that scenario, okay? Also, there is the scenario where you have formed, guys, and I'm just freestyling it over here. I'm not going to go through and explain every scenario in detail. If you would like to know all the scenarios in detail, I encourage you to go watch yesterday's live stream. I think it's a video update. It's about 8 minutes, guys. It summarizes all the scenarios from a higher time frame perspective that could play out over here. The one that I've just explained is one that I forgot to include. I do have it in the folder. For some reason I didn't go through it, so it basically is a WXY here to the downside. Okay, so now one of the scenarios is, I'm just freestyling it over here, is you have a 1, 2, 3, 4, 5 extended fifth wave to the downside, and it's done. Maybe one more low. It's perfectly fine. You sweep the lows, you get acceptance back above. That's a sign of strength. You know where to put your stop loss, and there's a good chance that you can get some nice momentum back to the upside, okay, in a completed 5-wave structure to the downside. I do have a little bit of a concern with this little move. If this is a 1, 2, 3, 4, 5, I have a little bit of a concern from a technical perspective. Okay, and this is what I highlighted in the update yesterday as well. My concern is here on the larger time frame. If I zoom into the 12-hour, for example, okay, and you look at this structure, it looks very three-wavy. 1, 2, 3. It looks very much like a three-wave structure. And if this is the end of a 5-wave impulse, well, it's not allowed. Okay, It's not allowed. It's not just, it's a 5-wave impulse to the downside, your last wave. Okay, well, all the waves are not allowed to be 3-wave structures. And for now, this looks very much like a 3-wave structure. So number 5 can be moved. Okay, where, let me do this, where you take the low in a 1, 2, 3, 4, 5. Now that looks better. That looks way better. But you don't expect price to break down $10,000-$20,000, capitulate to the downside. You want price to dip below, grab the liquidity. Everyone that's been longing like crazy people in this zone, you basically stop out all the longs, okay, and then you get the nice little rally to the upside. So in a nutshell, okay, and then there's also the ending diagonal, but like I said, guys, I'm not going to go through all the scenarios again, okay. 1, 2, 3, 4, 5. There's also the diagonal that could form over here, okay. 1, 2, 3, 4, 5. Same outcome, okay. It basically is almost exactly the same outcome. Whether this is a 1, 2, 3, 4, 5, and maybe we take the low again. Whether this is a 1, 2, 3, 4, 5, it is a very interesting area to look for longs. Extremely interesting, and I'm already on a long. If I get stopped out, I will look for entry further down. And I will also discuss, well, what level here to the downside does look very juicy for a long if we do tumble down here and we do not create a higher low. Okay. Guys, for me, there's nothing better. I told the community this morning as well. For me, there's nothing better than a free trade. If you can get into a short and a long, you take some profits and you protect your position, you have a free trade. So it doesn't matter if you're wrong or right. You just get stopped out with the profits that you've already taken. And then you look for a better entry, okay, or a different trade, depending on your plan, your trading plan. So for me, and I'm unfortunately not signed into my Bluffin account at the moment, but for me, I don't mind. I'm in a long over here, guys, in the 15-minute time frame. I'm sure I've shown that trade, okay, during one of my live streams, but I am in a long at $64,000, around about this zone. I'm in a long. So if price wants to fall down here and stop me out and it gets the bounce, I know, okay, how to play this trade. It's either going to be a break off trend, maybe I'll get in there, or maybe we have some interesting levels here to the downside where I can play some SFPs from. Or, okay, and I'm going to go through, guys, I'm going to go through the local structure now. I just want to wrap up on the larger time frame, okay, just to explain to you what could potentially play out here. But in a nutshell, okay, let me just bring this whole structure in. Whether it's a 1, 2, 3, 4, 5, or whether it's a 1, 2, 3, 4, 5, okay, it is a very interesting area to look for a bounce from a day trading perspective. Dare I say, even from a swing trading perspective. Because regardless of what this is going to form here to the downside, it has to retrace itself at a bare minimum. If the bear market wants to continue to the downside, well, I do want to take advantage of the bounces to the upside, but it does not make sense for me from a technical perspective to look for especially swing shorts in this zone. Okay, if you're building, for me, guys, and I remember the disclaimer that I shared during the beginning of the live stream. This is my trading plan, my technical analysis. You need to do your own research. You're in charge of your own finances. But for me as a technical trader, it does not make sense to look for shorts in a zone after you've already had such a big move to the downside. That was an interesting shorting opportunity. Okay, impulse down, long 3-wave structure, yes. Grab the liquidity, SFP, we spoke about it, WXY, rejected at the 786. I'm not going to go into all the details of what happened here, but a very, very complex corrective structure. So since the low was made here on a high amount of volume, there was some money to be made with this 3-way structure. Guys, I traded this structure like a crazy person. There was longs, there was shorts, there was SFPs, there was break-off trends, there was everything inside of that structure from a day trading perspective. But overall, the bias was that it's very difficult to count the end of something here, okay? 3-wave up, continuation to the downside. Now we created this move with a high amount of volume, especially if you go here onto the daily time frame and you look at the volume candles, okay? And remember what I said in the short last night. The short that I published, if you did watch the short last night, usually, okay, it's just a game of probabilities. Usually when you end something on a high amount of volume, it signifies the end of something and the beginning of something new. In most instances. Nothing's ever guaranteed in the market, but if you, look at that. Okay, high amount of volume, and we got a 3-wave up. Then we fell. So maybe also a 3-wave up, and then we fall, but I can still take advantage of that move. There's a consolidation area, definitely an interesting profit-taking zone. Okay, perhaps it's just going to repeat. Move, 3-wave, move, 3-wave, move, maybe another 3-wave, move. Okay, it can just continue until you break the momentum. Until you break the momentum, well, the trend is down, and it's in your best interest, specifically from a shorting perspective, to look for shorts. But this is not where I look for shorts. The move has already happened. That is where you look for shorts. That is where you look for shorts. Not here. Because you have to also think to yourself, well, if you are looking for shorts over here, it's like trying to look for shorts over here. Technically, for me, it doesn't make sense. Okay, so now, I think the juicy part. Let's go on to the 15-minute time frame, and let's discuss this little structure over here. For the community members that are inside of the live stream, remember to smash up that like button. I've already shared a couple of, myself and Andy have shared some updates this morning inside of the community. If you'd like to be part of the community, it is for free for 2 months now. It won't be forever. So if you want to see what the community looks like, if you want continuous updates during the day, if you want to learn to fish for yourself, okay, link is down in the description. DM me the word access on Telegram. There's the link. Just DM me the word access and you'll get instructions on how to join the community. It's that simple. Inside of our community, we do a lot of technical analysis on Bitcoin. We discuss Elliott Wave theory. I like to talk about the D-line strategy as well, swing failure patterns. We have Dylan, one of our coaches, that does altcoin analysis, okay, opportunities that he sees, total 3, BTC dominance, USDT dominance. We have news, we have fundamentals that gets dropped. There's a lot going on in this inside of that channel. And myself and Andy did say we're going to spend a lot more time inside of the community. So YouTube, guys, it's an hour or 2, okay? And then it's over. So what happens in between is what you get in the community. Okay. Now, let's zoom into the 15-minute time frame. Guys, I really don't like to go lower than the 15-minute time frame. Okay, it's my favorite lowest time frame to trade. It also removes a lot of noise from the charts. Okay, so now, since the low was made over here, okay, this is becoming very complex, just like what happened over here. Okay, do you guys remember this 3-wave structure? This one? Sorry, maybe I should just zoom out a little bit. I'm getting lost here on the smaller time frames, okay? Do you guys remember this 3-wave structure? I just want to paint the picture of how complex it can become. Okay, we are most probably here now. Maybe we are here. Okay, we've had the move up and now we are just chopping sideways. It can still go down, it can still go up, it can still go down, but overall it actually formed a WXY, a very complex corrective structure, where you basically formed your W, your X in a triangle, and an ABC to the upside, claiming the 0.786, and then you have a W, X, Y corrective structure, and then you fell to the downside. And now, when you look at the size of what we have formed at the moment, it's still very fresh compared to that. Okay? Very fresh. So there's still a lot that can happen inside of the structure. Claim the low, don't claim the low, go up, go down, go sideways, make circles. Okay, there's still a lot that can happen here. But the opportunity that it presents is, okay, you have to have your trading plan. You have to have your levels ready. Okay, because I know a lot of people do struggle with Elliott Wave theory. I know that. And I do try and keep it as simple as possible. So from a simplicity, now let's talk about the simplicity. Okay, maybe before we dive into Elliott Wave scenarios, which is very complex, let's look at the simplicity of the structure first. Okay, you have a trend. that has been broken out from. Okay, you broke out from trend. You have closed, okay, and I'm just applying the rules of the strategy. The rules of the strategy state, once you've broken out and you've closed multiple candles outside of the trend, it does increase the probability to form a higher low and continue. Okay, it's just nothing's guaranteed, and that's why you trade with a stop loss. So it's up to you to manage your risk. So from a D line perspective, and the reason I call it D line is because it's named after me. This is the strategy that I presented to the community a couple of years ago, and the community members named it the Dewald line. Okay, so and then people said, no, Dewald is too long, let's just call it the D line, and that's now why it's the D line strategy. Because in essence, you only trade with one line. That's it. That's how simple the strategy is. You trade with one line. But there's rules around the strategy that you need to follow. Okay, so based on the rules of the strategy, you have closed multiple candles outside of the trend, which for now is a bullish sign. Your stop goes below the low. This is where you build your position, and then you take profits to the upside when you start hitting resistance zones. Okay, and these little waves, do you see these waves? That's where your resistance lies. Okay, that's where the resistance lies. So then it becomes trade management. How do you manage your trade? Do you just leave your stop loss and put your TP over here, and then price turns around and stops you out? No, you need to manage your trade. You need to take profits. You need to de-risk your position, however your plan dictates to you. Okay, so from the rules of the strategy, okay, maybe price comes down, you get that perfect retest, okay, still forms the higher low, and then we continue. Often what I like to do with this strategy, okay, when price breaks out and it starts falling to the downside, what I like to do with this strategy is I like to, back on the 15-minute time frame, give myself another momentum line that needs to break. Okay, so what I will do is I will do this. And what I will often do is to say that, well, if I did not catch the breakout, or I don't want to build a position, I will say I'm going to sit on my hands until this line breaks out. Okay, that's another way that you can exercise and practice this strategy. Because by waiting for this line to break out, if price wants to fall and claim the low, well, at least, okay, you followed your rule. You did not get into the trade. If it breaks, well, that's a sign of strength because you're breaking momentum. Okay, you're breaking momentum. That's a sign of strength. There was also a nice one over here, if I remember correctly. Okay, this was the first one that I was tracking. That one. You're breaking momentum. Okay, I told everyone, keep an eye on this trend. You're breaking momentum. If you entered with your stop below the low, you hit resistance. That's where you got rejected. Hopefully you took some profits. I took 50% profits here. Okay, at the 0.382 when you take a flip from the high to the low. 50% profits. I still have some of the long position running. Right, guys, a lot of education. Remember to smash up that like button if you do enjoy the content. My goal is to teach you to do this successfully by yourself. So I know I do shower you guys with a lot of education, and people just want to, well, get to the trading opportunities. Guys, it's not just about trading, because if you can learn to do this properly, you don't need me. Okay, you don't need to watch these live streams. You don't need to watch anyone else's live stream. You can just switch off social media, delete YouTube from your computer, and trade by yourself. And I did that actually for a long time, guys. I actually did that for a long time. When I started turning profitable as a trader, I stopped. I put a test on myself and said, I'm going to stop following any influencer. I'm going to close YouTube. All I'm going to do is trade. That's it. I'm just going to trade my own analysis, because other people's opinions can often scare you out of your trade or let you FOMO into something that you didn't want to get into. Other people's opinions can influence how you trade, and then based on your own analysis, this is what I found, based on your own analysis, you can chicken yourself out of your trade, FOMO into something stupid, and then after the fact you realize, I should have just stuck with my plan. I knew my analysis was right, and now because I listened to this bloody idiot, he changed my mind and the trade played out. Damn it, I should have stayed in the trade. I'm sure you all can relate. Okay, very educative. Guys, yeah, so maybe let me go through some comment. Guys, I get so into the technicals and into the education that I do often forget to go through the comment section. Okay, very educative. Thank you so much. Thanks for joining the live stream. Distance Masuk. Okay, what about possibility of dead cat bounce to 200 daily moving average? David, I don't really use moving averages as part of my trading strategies. If you can just let me know at what price the 200-day moving average is. The other day I tried to put the 200-day moving average in and I couldn't even get that to work. I used to use moving averages when I started out and it didn't work for me, so I just thought, okay, it's not for me, I'm not going to do moving averages. But I see it's trending all over social media. Everyone uses the 200-day moving average. I don't need it from a day trading perspective. Okay, today is Wednesday, Thursday tomorrow. Oh, did I say Thursday? Am I a day ahead? Damn it. It's Wednesday today. Right. For you, it's better. To many people, it's loss if it goes further. Okay, morning, Dewald. Morning, all. Welcome to the live stream. Nico, Dewald cleans up on Thursdays. Sorry, guys, if I spoke about Thursday. I for some reason, I think it's Thursday today, but luckily I got an extra day of this week. Okay. Love the analysis, sharp to the point, dynamic. Right, guys, Dewald legend. Let's get cracking. Let's carry on with the technical analysis. So still keeping it simple without bringing Elliott Wave theory into this. Okay, you have to have support. Basic technical analysis, you have to have support and resistance marked out. Okay, the best support and resistance that I like to mark out is point of controls, daily levels. For some reason they mixed up my folder, and weekly levels. And then you can include monthly levels as well. Okay, and these levels do offer nice little swing failure patterns, support, resistance. Okay, this weekly level, guys, this weekly level here, I'm actually just going to delete it because price has just been swinging through this level like it doesn't exist. So for now, I'm just going to not pay attention to this level. Okay, I'm just going to delete it from the chart. Right. So now let's take out the trend lines, okay, because I've already spoken about the trend lines. Now we do a little bit more technical. We take a fib from the low to the high of the structure, still just keeping it simple. And from a confluence perspective, that's what you want to see as a technical trader. Okay, from a confluence perspective, we have a point of control together with a 0.618. A little bit further down, we have the daily level together with a 786. And we all should know by now that these two zones usually gives a nice little reaction or a bounce and can offer great support. These are the zones where you want to see price form a higher low and continue to at least go and take the highs. Okay, so definitely two areas that I'm very interested in if price gets there. I also realize that price might not get there, and often the market loves to front run. And the best front running level that I do see is the 50% Fibonacci. I must say I have seen this often where a lot of eyes are on a specific level because it has confluence and technically it makes the most sense. And then this happens. Okay, it's still a Fibonacci level, it still has support, and it can still be respected. So if price, for example, dips below and it gets acceptance back above, you have your trend, price breaks out, there's a good chance you're going to go and claim that high. Because we all know that the market loves to front run. So this is the front running level that I'm currently watching at the moment. And if it wants to get aggressive to the downside, well, we know that these levels can definitely offer some support. So in these scenarios that I'm sharing with you now, we are speculating that, well, what if price makes a higher low? Okay, this low is protected. Price makes a higher low and it continues. Right, well, here's your scenarios. You can wait for the break of trend. You can wait for the swing failure from the 0.5 or at the two levels that I've identified at the bottom. And you can see I still have not brought in Elliott Wave theory into this. It's just basic technicals. Keeping an eye on momentum, the trends, looking at my Fibonacci levels, having my support and resistance levels in place. Okay, that's it. Guys, it's all you need to trade. Okay, And this is how I traded in the beginning. Okay, now I just want to talk about, before I go into Elliott Wave theory, to show you, well, how does Elliott Wave theory align with these simplicity things that I've just shared with you over here. If for some reason price decides stuff the levels, it just falls. Okay, and it falls like a hot knife through butter, increasing volume. You want to see volume increasing with a fall to the downside as well. I'm now just talking about the worst case scenario. Okay, I want to see the following. If price starts to fall here to the downside from a structural perspective, I want price to slow down. I want to see that. I want to see that. Price needs to consolidate to show me that it's slowing down. The biggest mistake I've seen a lot of people make, because guys, I get a lot of personal messages from community members. Okay, price falls and they try and long. Price falls, they long. Price fall, but it hasn't shown you that it wants to stop. It hasn't shown you that it's getting exhausted. I would rather have an entry that's a little bit late, like this entry. Okay, I entered here at $64,000, right there. I did not enter there because I was waiting for a sign of strength. There was a point of control. I wanted price to get back above that level. Okay, I was waiting for a sign of strength. So I don't care that I had a late entry. I still made lots of cash over here when I took profits. But now I have confirmation on my side. Trying to catch a falling knife, you have no confirmation unless you're playing swing failure patterns. That does take experience, by the way. Okay, so I would rather wait for price, okay, let it fall, okay, and wait for price to slow down. Once price starts slowing down, you know that the bears are getting exhausted. They're like, we can't do this anymore. We're running out of steam. That is where your trading opportunity lies. Okay, to get at least a little bit, and then, you know, that becomes resistance, profit-taking area. But price needs to slow down. So if price falls aggressively to the downside, okay, we have a monthly level below this low. We have a monthly point of control, so there's massive support in the zone, round about the $57,000 zone. So remember that higher time frame scenario. If you've been watching the stream here since the beginning, that higher time frame scenario that I've shared with you is that if price wants to fall here to the downside in a fifth wave to complete that structure that's still missing that fifth wave, this is where I will be looking for the long. But I want price to slow down. It needs to chop. I don't care if I catch the long over here. I will obviously just use less capital to cater for where I need to put my stop loss. But I know the potential. I know the potential can go high. Okay, from a risk to reward perspective, it still makes sense. Okay, so now let's clean up the kitchen, as I like to say. Now we can bring Elliott Wave theory into this to say that, well, how does everything now align with Elliott Wave theory? So first scenario I want to talk about, remember to smash up that like button. If you guys want access to this alpha that I'm sharing here, that I've already shared inside of the community, DM me the word access in Telegram, link down in the description, and then you can get access for 2 months for free. Okay, so first scenario I want to look at is, and let's delete all of this. Let's talk about, okay, I will get to that in a second. Let's talk about a WXY. Can also be an ABC. Okay, first scenario is you have formed an A, B, C, and a W. Ideally, you want your X to bounce in this zone and not claim the 0.7 if price is still going to claim the high. Okay, now you guys can see, I spoke about the 50%, the front running level. Maximum level here where you have that naked point of control at the 618 as well. So now you can see how I combine Elliott Wave theory with the simplicity of trading that I've just shared with you. Okay, so in this scenario, you basically have formed an a WXY. Okay, A, B, C to form your X wave. Basically a 3-wave structure to complete your X wave. Can it be in? It would make, I would like that 50% to be at least smacked in this scenario. And then to complete the Y wave, you want to see an A, B, C to the upside. And as long as X can stay in this zone, it has a higher chance of moving up and claiming the high. Okay, just going to keep it simple. If X falls down and it claims the 0.7, it increases the probabilities significantly that you are going to get a sideways range, maybe a triangle, but you're not going to claim. There's a greater chance in not claiming the high. So you could still go sideways and fall down. Okay, and this is in the WXY scenario that I'm sharing with you over here, because when X taps the 0.7 fib, it increases the probabilities that Y does not have to claim W. So it can build a sideways corrective structure without claiming the high. It can form a triangle, it can form a flat, but it increases the probabilities that Y does not have to claim W unless it bounces there. Then you can get a nice little sharp zigzag to the upside. ABC, go higher. Okay, and I think this is why also some people are interested in that $75,000, $74,000 zone. Okay, from a target perspective, you will take your fib from the low to the high of W to wherever X is going to finish. I don't know if it's finished here or if it's going to finish here. Let's just put it here in the middle, okay, just to have some reference. The minimum target for a Y wave is the 0.618. Guess where we got the rejection inside of this structure? Do you guys remember where we got the rejection inside of this structure? And just to show everyone, okay, let's do this. Do you remember this? And it was also a WXY. Do I still have it here? Let me see. I should still have it here. There we go. I still have it here. Look at this. And you can see how complex this gets. 3-wave structure in a W, ABC in a small little double, but you basically had a WXY, okay, which then formed a triangle in an X wave. You can see how complex this can get. And then Y formed an ABC, and look at where it got rejected, at the 786 to perfection, and it fell down. But you basically have a WXY. X did not tap the 0.7 fib, increasing the probabilities that you can get a Y that takes the high of W. So here's a perfect example. It just played out on a larger scale. Okay, so now let me take all of this scribble here out the way. And this is now what I'm trying to demonstrate over here, back onto the 15-minute time frame. Okay, exact same scenario. 3-wave W, you could form an X, and you can go up for that Y that rejects at the 786, which is $75,000. Interesting zone that a lot of people are paying attention to. Definitely a zone where I will be looking for shorts. Because remember, if you are, let's say you catch the long, and this is a profit-taking area. Profit-taking areas presents the opportunity for shorting areas. Why else would you take profits there? If it's a resistance zone, why else would you take profits? If it doesn't become a shorting opportunity. If you're taking profits at a zone that doesn't make sense to short from, then your profit-taking area is in the wrong place. Okay, so now that's your WXY. I'm really trying to keep it simple over here, but Elliott Wave theory, unfortunately, is not easy, guys, and that's why I started with the easy analysis first. Okay, easy analysis, you've broken out of that trend that I've highlighted. You build a position, you want to form a higher low, and as soon as you take the highs, you start hitting resistance, that's where you take profits. Can you guys see how a simple strategy, okay, tells you that you actually don't need Elliott Wave theory? Because I got this question many times from people saying, Dewald, I don't know Elliott Wave theory, I can't be a successful trader. Yes, you can. Because I was successful in trading before I knew Elliott Wave theory. I studied Elliott Wave theory because I'm just that type of person that likes to see how deep the rabbit hole goes. I like to just dive into the knowledge of what this can offer. Okay, and I knew Elliott Wave theory was the most difficult thing to master, and that's why I first wanted to use a trading strategy and become successful at the strategy before I dive into Elliott Wave theory, because I know it's very complex. Okay, and hopefully here on the live stream I can make it a little bit easier and simpler so that most people will, you know, get the cusp of it, or the gist of it. Right, let's go through another scenario. That's the WXY. There's also this little one that's going to get a little bit more aggressive here to the downside. Okay, you have formed. Actually want to move A over there because it doesn't make sense to move A here. I'm not going to go into the technicalities of it, but you basically have a three-wave structure in an A, which means that B has to tap flat targets. Okay, and that basically means you take a fib from the low to the high and you reverse it to the downside, and I will switch on my flat targets. There we go. And inside of this box, unfortunately it's a big box. Let me just put the box there. I think I put the settings wrong for this one. Let's switch it on again. Flat. Get my flat targets. Okay, there's your box. Unfortunately, it's a big box, but I keep an eye on each level to see if I get a reaction at each level. Okay. So in this scenario, C or B has to tap a flat. So if this is a three, whoops, where's my pen? Let me just grab my pen here. Because, let me rephrase, because this is a three-wave A, B has to tap a flat target. So the minimum target is $61,125 in this scenario. It does not have to claim the low, but it can. You can see the box is big because these are flat targets. 0.9, 1. I see some people also include the 1.05. I do have it here as well. If you want to be now very, very technical, you can include that level as well. So basically in this scenario, what you want to see is for price to find support in the box, and then you get a C wave to the upside. And this is what we call a regular flat. You get a B that taps a flat, and you get a C that takes the high. I often like the B wave to dip below the low because that's where all the liquidity lies. That's where all the stop losses are. So it's nice to get an A, B, C. Takes the low, takes the high, shorting opportunity. Can you guys see? Very similar to the WXY. The only difference here is this can still get nasty here to the downside. Okay. For the moment, the scenario does not carry the highest probability. The WXY that I've shared with you carries higher probability. But I'm still talking about it because it has not been invalidated. Because basically in the scenario, you are forming some sort of three-wave structure here to the downside. Maybe it's an A, B, and it's going to go down in a C here to the downside. Okay, but it has to be B waves, has to be three-wave structures. It's not allowed to be an impulse. Okay, next scenario. Do I have a next scenario? Let me just make sure. Chum. Now, this is, guys, this is a scenario that I was keeping an eye on that got invalidated. It's not a hard invalidation, but I don't like to see a B wave. So you basically have formed an X, a W in an ABC to the upside. You have formed a WXY inside of an X wave. So this X wave actually needs to move there. Okay. Anyways, I don't like the scenario. It has been validated, so I'm not even going to talk about it. So no use for me to explain the scenario. So for the moment, okay, let's go back here onto the 1 hour time frame. There's a chance from a simplicity perspective, you've broken out. There's a good chance that you're going to form a higher low. The most interesting levels that I'm keeping an eye on is when I take a fib from the low to the high. If the market is going to front run, I think it's going to happen at the 50% Fibonacci because there's confluence in this zone. Okay, so I think if the market is going to front run, it's going to happen here at the 50%. If it falls down further, I will look for swing failures and a sign of strength at the 0.618. Okay, because remember, in a WXY, you don't want to go lower than the 0.618. And then if things gets nasty and price just falls here to the downside, I will look at that 0.9 from a flat perspective. A, B, C. So from a directional bias perspective, I'm still looking for up. It doesn't matter what happens here. I'm looking for a move up to claim the highs again. That's my directional bias. Now, because of all the scenarios that I've shared, whether we claim the low or don't claim the low, because I have directional bias from a technical perspective upwards, I'm looking for longs, not for shorts at the moment. And that is basically the technical analysis in a nutshell. What I will do is I will definitely keep the community up to date. There's another scenario that I wanted to share here, but you know what? I want to reserve it for the community. It is for free if you want to join, guys. So you don't have to get upset. Why does the community only see this scenario, not me? It is something that I'm keeping an eye here on the 5-minute time frame where I'm interested in a longing opportunity, but I'll reserve that for the community. If you want to be part of the community and get these updates from myself and Andy and the coaches, link is down in the description. DM me the word access and you'll get 2 months free access to the community. You just have to follow the instructions. So thanks for joining the live stream. Until the next one, cheers for now.